Good evening, I'm Bridget Taylor and this is Currency Wars. There's been more strike action plaguing the South African market, with NUMSA joining in and rejecting the offer from the automotive companies of a 10% increase. According to the Cambridge Business School, mine workers have lost 45% of their annual income through the recent strike action, and it's estimated that it'll take them 2.5 years to recoup these losses through the recent wage negotiations. The latest NUMSA strike puts further pressure on the GDP growth targets. This is as the automotive manufacturing sector contributes 6.8% directly to our GDP. The manufacturing sector growth has already declined from 9.2% in the fourth quarter of 2013 to 2.7% in the first quarter of this year, with the NUMSA strikes affecting 220,000 workers in total, compared with the 70,000 miners involved in the platinum strikes. The pressure on GDP will be even greater. The rand remains vulnerable as both the US upswing and a stronger headlines job growth in the United States continues to generate speculation of rising interest rates in the US. The South African monetary policy, however, fails to attach enough importance to the long-term erosion of the savings base through no to negative real interest rates, and instead continues to favour a policy designed to boost short-term consumption. Despite this fact, this very policy is clearly not the saving grace for growth. Now that we've seen the lay of the land, I'd like to welcome my guests, Andre Eerenstein from RMB, and welcome back, Danny Piennar.
Thank you.
Micromegas, how's that going?
New start, new dawn. Unfortunately, unlike the rand, I think we have some things to look forward to, hopefully. It's not all doom and gloom, but yeah, it was nice to spend some time at home with the kids, but good to be back.
Great to have you back. So let's tuck into what's happening. We can, I think there's quite a lot to talk about. I mean, we've got all the strike action, which is obviously front and centre, MPC, monetary policy, and then obviously the comments that came out from Yellen this week, a little bit more hawkish, I think, than the market kind of, the market's been iffing and eyeing about those FOMC minutes, and then Yellen's statement just kind of signalling that they are keeping an eye on that curve in terms of the interest rates in the US. So what is your view in terms of what she had to say and where that puts South Africa?
Yeah, I think she was relatively hawkish, but on balance, it's nothing new.
Yeah.
They're going to look at where things go. Employment in the US seems to be growing, and I tell you, she's going to become a lot more hawkish if you have a few more numbers like we had in terms of non-farm payrolls.
But that's the thing. I mean, the growth momentum's been awesome, so that's, I think, the market's starting to get a little bit nervous. But then it starts to put into question where to from here. And we've talked about this interest rate outlook, and it really does put a bit of a spinner in terms of if we look in South Africa. So what is your view, Dan?
To be honest, having been out and coming back and have this wealth of information over the first 2 weeks, the first thing that I noticed is that interest rates in the States will go up. At some stage. I think that the markets, emerging markets in particular, over the last couple of months have thought that's going to be, or have been thinking that's going to be in the next 2 weeks or the next month.
Yeah.
I think it'll be a longer time frame. I think that's what she's kind of saying to the market, but at some stage they're going to raise rates. I do think the market's going to get caught with their pants down when that happens.
Yeah.
So people are trying to hedge against that, but then they get caught, obviously, the cost of carry, and the market's a little bit long, etc., etc. So I do think rates go up in the States. We do think rates go up locally. I do think the rand is on a weakening path, and I think when rates go up in the States, emerging markets will weaken, South Africa will be at the forefront of that.
But that's the key, that's the key point, because she did give very, very clear guidelines, as Bernanke did at the beginning of this whole, pulling back quantitative easing, etc., talking about inflation, talking about unemployment. Very clear. However, those numbers are starting to really show that there is growth momentum in the US. I mean, we saw even Chinese growth is starting to look a little bit better than what was initially anticipated. So all of those kind of drivers put South Africa in a little bit of a conundrum because we're still sitting on such low growth levels. And that's going to come back to our comments around the strike action and that knock-on effects on GDP. I mean, if we look at what the knock-on effects just with the mining strike action had on GDP, we can expect this manufacturing situation to be much more dire.
No, I think, and the growth prospects are dire, and they're going to be, we are posed to the downside in terms of economic growth.
Yeah.
I think the risk is when the Fed start raising rates, and I think that's probably going to happen first quarter next year.
Yeah.
If the SARB hasn't raised rates enough, I think we're going to have a very big run on the rand, and she's going to be forced to hike rates a lot more aggressively for a much longer period of time. So if the SARB, in terms of monetary policy, they should be hiking rates to actually get on the front foot, so that we can try and cushion that effect. Because when the Fed starts raising rates, I think it's going to be a very small door.
Yeah, I think where that leads in, in terms of the rand, before I stepped away for a little while, we were talking about the prospect of a ratings downgrade, which we had. And surprisingly enough, the rand actually, for me, it's strong. So I think the rand has a lot of room to weaken if this comes to the fore. That's why the SARB has to act. And Jill Marcus is, unfortunately, at the moment, she's a bit like Barry Roo. She's in control of a pretty bad situation, which is now getting out of more control, and things are coming from the side. So she has to act, as we said, as we mentioned. The strike action, you know, from a perception point of view, is pretty poor. Locally, things aren't great. You know, as we all mentioned, everything's going up every day. Yet people want jobs, and yet people are on strike. So the government really, and the SARB and the Treasury, has to get together and go get this growth picture back on track, get us out of this fragile five. You know, the BRICS thing is a little bit positive. How do we put in the National Development Plan? Let's get that going. All these nice rosy things we just don't hear about.
But they take a long time, Dan, and that's the problem. I mean, in this environment where we're running higher and higher inflation, we were talking about it offset and just saying, you know, that's what is publicized, but the reality in terms of the income for the individual, and even more so those that are on the lower end of the income state, is really under a lot of pressure. I mean, we're looking at petrol hikes again. We're looking at this cost push pressures coming from the electricity hikes, etc. So all of these play into the hand that you don't have money to save. You don't have you don't have money to spend. So now what? You know, you're lucky to have a job. So in South Africa, there's got to be some form of impetus placed on creating opportunities for jobs, giving people who want to work an opportunity, creating that middle class and putting people in a position. However, that's going to take time. So in terms of where we're going to from here, I mean, we talked a lot about the monetary policy outlook. We've got the Eurozone remaining as they are. They're probably a little bit more aggressive at the moment just because they have to be. And then you've got obviously the United States. So in South Africa, looking forward, let's start to look at like the next week or so, and let's just look at some of the risks and hindrances that, you know, that the viewers can watch out for, just in terms of data, in terms of news flow, etc. And obviously, I just want your call on where the rands are going. Right, now that we know the lay of the land, let's have a look at the views for the week ahead. Dan, do you want to head off?
For me, I think there's an outside chance the rand gets to 55, 58 on the day. I'd like to buy around that area. I think that's a really, really nice place to get involved long dollars. Overall, we still fairly much range bound, 55, 85. So towards the bottom end of that, I think you can load up pretty aggressively. I think over the next 2 weeks, we'll test the top side, 1085 to be taken out. We'll probably look at 1105. Okay. But just in the next week, 55, 85, look to buy dips.
Awesome, thanks very much. And Andre, anything different on that, or are you a similar view?
No, I have a similar view. There's a lot of event risk around, and I think when we look at sentiment, that's going to be driving it. The sentiment is to the top side. So I think I don't agree with Danny in terms of the bottom range. I think we see a 60 is probably going to be the bottom, and I think we're at high risk of taking out the 90 to 1105 and probably even higher. Sure.
Okay, and event risk, quickly just highlight some of the event risks that you're watching.
Well, we're going to be sitting with data out of the US, and we've got to see how the strike action continues. The longer it continues, the bigger problem it becomes for economic growth, the bigger problem it becomes for our current account deficit, our fiscal deficit. The problems just continue to compound, and that's going to put ratings again on the table.
On the back foot, exactly. So in conclusion, the trading strategy for the week, looking for a weaker rand. However, we might just see a dip to 1060 or even slightly lower in Danny's view to 1055. If you see that sub 1060 though, golden levels to buy, looking for the upside because of all the event risk out there, particularly the strike action. If you'd like to send any questions or comments, you're welcome to do so at CNBC Africa, #CurrencyWars410, or myself at Bridget R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trading chase.